Hey everyone, to start 2023, I wanted to take a look at some of the favorite stocks that people have in their portfolios in terms of just the amount they have in their portfolios. And of course, some of those names you all know, Apple, the Teslas of the world, the PayPals maybe to a lesser extent, but some of those momentum growth story names that everyone still has or lots of people have in their portfolios. And when we look at some of those names, whether it's Apple here in this chart or we look at, again, in an extreme case, something like Tesla, um, we have recently reached some pretty extreme readings in terms of oversold. And I think we're going to continue to see this pattern take place in 2023, where these stocks have sharp rallies and they get extremely overbought, and then sharp sell-offs and they get extremely oversold. Just to have a look at Tesla, or let's have a look at Apple, because Tesla is always a bit extreme. But if you look at Apple, for example, this is just this past year. I mean, the stock was extremely oversold in June after having dropped 26%. Then this thing rallied 35%, got extremely overbought, and then on a shorter sort of time frame, got extremely overbought in November, and I think it's now quite oversold. So these extreme readings, we can actually figure those out. A simple way of doing that is using something like a 21-day moving average, which I have here, and if you get a certain mathematical equation above that or below that, we get a pretty good idea that the stock's going to be traveling in the opposite direction for a while. Like, for example, let's say Apple. Let's say this is extremely oversold right now, just for argument's sake. I mean, there's really no reason why the stock can't rally 10, 15% in a very quick fashion. And so if we extrapolate this into a bit more of a sophisticated model, we're actually using something called our Vertical X Pro, which looks for these moves and find stocks that are extremely overbought and oversold in this sort of multi-week time frame, and it tells us when that's taking place. And those are extremely high probability trades where we can then put on structure certain trades to not only make money if, let's say, in the case of Tesla, the stock goes a bit higher, but even if it doesn't go higher, even if it just stays put or even goes against us to a degree. And it gives us an extremely high probability to put on trades in this kind of an environment where it's been really choppy and people have been gotten cut up, with 1,000 paper cuts. So if we have this combination of figuring out when something's extremely overbought, like for example, Tesla once again was in August, or I think extremely oversold now here in the early part of 2023. And we can put on these trades where we don't have to be directionally correct as much, or nowhere near as directionally correct as if we put on a directional trade. That really sets us up for really high probability trades. I'm doing a webinar this week to show you not only how our indicator finds these extreme overbought and oversold situations, but also the specific strategy that we use to make these less directional bets. So we right out of the box have more than a 2/3 chance of making money any given trade, and ultimately, if we do it right, closer to an 80% chance of making money on a given trade. Hope it helps, and we'll see you guys in the webinar.